What is going on, guys, and welcome back to another very exciting video. In this video, we're going to be taking a look at Shopify. And Shopify is not a company that I personally own, but it is one that interests me for a number of reasons that we are going to go over in this video here today. So the first thing that we're going to touch on is earnings. They have some interesting things going on with earnings that analysts are predicting over the next year. We'll take a look at all that. We are also going to go over their business model and why it actually interests me, because I think they could have a wider moat than what people really anticipate. Then I want to go over their most recent earnings announcement, some of the information in that, and then we'll take a look at important metrics like their employee count and their stock-based compensation. So if you enjoy the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Before we jump into all of that, let's go ahead and take a look at their stock chart. So here today, Shopify moved down around 1.7%. However, overall, if we look at some of these other companies, the market in general was trading down today. We could see Amazon traded down around 1%, Tesla down around 5.5%, eBay down around 1.6%, and then Apple was down around 0.5%. So overall, market was not doing very good today. If we look over the last 5 days, Shopify is down around 1.1%. Over the last month, it's up around 1.8%. And over the last 6 months, it's made an amazing run. We could see that it's up around 82%. And a lot of these more speculative plays over the last 6 months to a year, they have made large moves up, and Shopify falls right into that category. If we look over the last year, they're up around 86.6%. But if we look at the last 5 years, that's where things get a little more interesting. We can see over the last 5 years, the stock is up around 288%. However, from the highs back in 2021, the stock was trading around $170, and the highs to the lows were around an 84 to 85% move down. However, it's traded up, and since then, it is down around 62% from the highs. So I wanted to start off by taking a look at valuation, and really, it's difficult to find Shopify's valuation right now because they are an unprofitable business model. We'll take a look at their EPS here in a minute, but right now on Yahoo Finance, they have the current forward P ratio sitting at 178.57. And part of the reason that their valuation is sitting so low is Shopify has gone through a very interesting cycle over the last couple of years. We could see leading into 2020, the business was relatively unprofitable. However, in 2020, they started eking out a profit, and they saw a massive jump in profitability in 2021, where they reported a single quarter earnings coming in at 99 cents. They followed that up with 69 cents and then another 90 cents. Then they saw their peak of trailing 12-month EPS sitting at $2.68. And that is massive for a business like Shopify, where they were starting to prove that the business model is profitable. However, from there, the earnings started coming in negative again. We saw negative 29 cents, and that was followed up with a very negative quarter of $1.17 in negative EPS. And since then, they've actually started to get back towards profitability, and they're just starting to break through again back into that profitable zone. And analysts are expecting this profitability to continue over the next couple of quarters. We could see that for the current quarter, there are 30 analysts covering the stock. They have an average estimate for EPS of 6 cents. They have a low estimate of negative 7 cents and a high estimate of 31 cents. What's most interesting to me is the difference between the low estimate and the high estimate. That means the people that are very bullish on Shopify are very bullish. They're expecting great earnings from the company, and the people who are bearish on Shopify are fairly bearish. They're expecting the business to remain unprofitable. So there is a vast difference in opinions of where EPS is going to come in over the next quarter. When we look at the full year for 2023, we get a little bit more consistency in terms of profitability. All the numbers are profitable. We can see the low estimate comes in at 5 cents, the average estimate is 33 cents, and the high estimate is $1.06. So again, that is overall a good thing for Shopify to see all analysts in line that Shopify will be and maintain profitability. However, again, there is still a very wide range between these low numbers and this high number. And I think there's even a little bit more clarity when you look at the 2024 numbers. So again, 38 analysts covering the stock. They have an average estimate of 57 cents. They have a low estimate of 21 cents, and then they have a high estimate of $1.10. So again, I feel a little bit better about these 2024 numbers just because the difference between this low estimate and this high estimate is a little bit tighter of a range. That means analysts have a little bit more confidence that Shopify is going to be able to hit those numbers. So I did want to touch on Shopify's business model. Basically, what they are doing is they are working with businesses to set up online websites where customers can come and buy goods. And we could see some of these brands listed here on their website. So the ones I'm most familiar with are Gymshark, Untuck It, and then Kylie Jenner's makeup business. So there are two things really with Shopify Shopify's business model that I think are important to keep in mind. The first is the stickiness of their business model, because when we look at these brands, whether it's Gymshark or Kylie's makeup brand, it's very difficult once you get established with a platform to really move away from that platform, because you'd have to hire a whole team to come in and basically redesign your website on a different platform from Shopify. The second thing that Shopify has done really well is allowed for a lot of customization with their platform. A lot of these websites, whether it's Gymshark or Kylie's makeup brand, want their website to look like it is their own brand. They do not want a template where they are just copying and pasting and putting in their own logos for things. They want the website to feel like it is designed and made exactly for that application. And that is very important for keeping these businesses interested in this model and allowing for that customization that's needed to really increase their sales. We do see a lot of growth from Shopify's most recent earnings announcement. They announced gross merchandise volume increased 15% to $49.6 billion. Their total revenue came in increasing 25% to $1.5 billion. Their merchant solutions revenue increased 31% to $1.1 billion. And then their monthly recurring revenue increased 10% to $116 million. We do have some negativity in this earnings announcement. We can see that their operating loss was $193 million or 13% of revenue versus $98 million or 8% of revenue for the comparable period a year ago. Another positive that investors saw in this report was that Shopify announced that they were selling their logistics arm. So they sold it to a company by the name of Flexport, and really investors never liked this business move from Shopify because they were starting to compete with Amazon, and investors did not like that. They did not want to see Shopify get into something that's more concrete like that. Shopify for a long time has been really just involved in designing and creating websites, and that is a very simple business model that is easy to execute on. However, logistics, you have to have warehouses, you have to have a lot of tangible assets, and that is very difficult to compete, especially with a business that is well established like Amazon. And by getting out of this logistics arm, they actually are going to help the business in a couple of different ways. Here we could see a chart of the number of employees for Shopify over the last couple of years. In 2019, they were sitting at 5,000 employees, and here in 2022, they were sitting at 11,600 employees. So they have over 100% increased their employee count over the last couple of years. With the announcement that Shopify was getting out of the logistics business, they also announced that they were going to reduce their workforce by 20%. And investors love to see this for a couple of reasons. One, because they have obviously increased their workforce so significantly over the last couple of years, so this will bring down expenses. But two, it will also have an effect on stock-based compensation. And stock-based compensation is an issue that Shopify has experienced over the last couple of years. We could see in 2019, they were sitting around $158 million in stock-based comp. However, by 2022, they reached $549 million in stock-based comp. So with the reduction of Shopify's workforce, we should start seeing this number coming down. Overall, there's nothing for Shopify that really screams buy to me. I do like the company and I like the business model, but I want to see them get back to profitability. And I think they can do that over the next couple of quarters and potentially over the next couple of years, especially with them getting rid of the logistics business. I think that was creating a lot of drag overall on Shopify and their earnings. And I think now that they have gotten rid of it and now that they've kind of reduced their workforce, I think we could start seeing them hit very good profitability numbers. And I'm excited to see that in the future. So I really want to see them get back to that profitability. And I think that could be time for me to buy. However, it really just depends on overall what the market's going on. I think there's better businesses out there right now that are a little bit more attractive to me. So keep in mind, never buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your time horizon as well as your risk tolerance. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.